Investor sentiment has fallen to levels worse than the great financial crisis in 2008, and that suggests a stock market bottom may be nearing. Remember, this is only one contrarian indicator, and it's not the best timing signal. However, it's always better to see the data for yourself rather than put your faith into some talking head like me. So, let's take a look. Based on a rolling 51-week average of bearish sentiment measured by the American Association of Individual Investors Sentiment Survey, sentiment is at its lowest level on record since the survey began in 1987. And as you can see from this chart here, we appear to be at a level that is more bearish than at the bottom following the burst of the tech bubble in 2002 and at the bottom of the great financial crisis. Are conditions really worse than 2008? No, I don't think so. In my opinion, the overly bearish sentiment shown in this chart, combined with signs that inflation may be subsiding, means the stock market may be nearing a bottom. However, even if the market is near a bottom, that doesn't mean the recovery is going to be V-shaped. At the moment, I don't think we are at the bottom yet. And even when we do hit bottom, this market may drag on for a while. So stay tuned. ChewDog out.